After that, Rob returned to ATF headquarters as the Deputy Assistant Director for Field Operations. He was then promoted again to Executive Assistant Director of Operations, and then just over 1 year ago today, on April 10th, 2025, Rob was named the Deputy Director of ATF, a role that he has served in through today, and right now he's in that middle spot where he is the confirmed Director of ATF, but commission not assigned. So I think still technically Deputy Director, but we're fine. So from patrol officer to federal agent to special agent in charge, Rob has committed his entire life to serving the public and protecting communities nationwide. I know this personally. He's a dedicated father to Robbie and Gianna, a husband to Leah. He loves to fish, and he loves Florida. So, congratulations, Rob. I also want to take a moment to thank Secretary Dan Driscoll, who has been serving for over a year as the acting director of the ATF, and he's also the Secretary of the Army, as most of you all know. And that job is a full-time job, but I can tell you from my role as the Deputy Attorney General, and I know I speak for Rob as well, that Dan was a committed supporter and leader at the ATF. He has done everything within his power to do his job over the past year at the ATF, and supported its mission, supported the 1811s that work, keeping us safe every day. And so a really big thanks to Secretary Driscoll for everything that he did over the past year. And we're now happily able to tell him that within the next couple of days, he'll be able to go back to just being the Secretary of the Army. It is fitting, in my mind, that the first action Rob is going to take today in his new role is to sign the most comprehensive regulatory reform package in the history of ATF. I want to thank President Donald Trump for putting us on this path on January 20th of last year. His leadership made this moment possible. His executive order directing a full review of ATF regulations set the tone clear, direct, and focused on
one of America's strongest allies just left the organization that's been fixing oil prices since the 70s and told the US government it might start selling its oil in other currencies. And this isn't some conspiracy. This is Reuters, the Financial Times, Fortune magazine, everybody reporting this, while central banks, the guys who print all the money, are hoarding gold at a pace we haven't seen in history. By the end of this video, you'll understand the exact three-step framework I used to decode what's really happening to the dollar while gold is responding the way it is, and most importantly, how a regular investor can position for what's coming. My name is Felix Sprint. I'm an ex-investment banker. Winston here. Winston, sit up. Come on. Show your little face. This here, of course, is our research hound and our in-house gold analyst, Winston. And our mission is very simple. Share the stuff with you that usually only gets shared with the investment bankers. And today's topic is exactly the kind of macro shift that Wall Street sees coming. They know what it means. So let's break it down for everybody else. So we're going to run through the framework. Step one, understanding what is actually the competitor. Not some conspiracy version, the actual mechanics of how it works and why it made America rich. We'll do that very quickly. Step two, three specific fractures that are breaking the field. And then step three, where are the world's most powerful institutions actually putting their cash? And what does that tell us about asymmetric opportunities sitting right in front of us? Let's start with step one. Probably heard about the petrodollar, right? But let me explain it very briefly so you all understand what it means. It's important we have a baseline understanding. If you rewind back to 1974, we've just gone through the oil shock. Arab oil producers had cut off supplies in the US. Gas prices went through the roof. There were literally lines around the block from gas stations. So the US never looked at it. So enter Henry Kissinger, Secretary of State, a very, very good negotiator. He flies to Saudi Arabia and he works out an arrangement with the Saudi royal family. And this is really important. There is no formal treaty. There is no contract with an expiration date. A lot of people online get confused about it. Maybe it's a 50-year deal or something like that. No, it's not true. What actually happened was the US and Saudi Arabia signed a joint commission for economic cooperation. It is a handshake to work together. But the informal had three pillars. Pillar one, oil is priced in dollars. Dollars and dollars and only dollars. With FD's part. So every barrel of oil sold anywhere in the world will be priced in dollars. And what that means is that every country on earth that wants to buy oil has to buy dollars. It creates a massive, constant demand for US dollars. Pillar two, the money comes back home. All those dollars that Saudi Arabia and OPEC nations earn from selling dollars, well, they're going to recycle them back into the US economy by buying US debt, bonds. So the US government could keep borrowing really cheaply because there's always a huge buyer standing by because, the Saudis, someone's always buying oil. And then pillar tres is in exchange for it. The US gave Gulf monarchies military protection, weapons, and political support. So sort of you scratch your back and we scratch ours. Sorry, the other way around. You know what I'm saying. That's the machine. Been running for 50 years. It's the single biggest reason the dollar became and stayed the world's reserve currency. So why does it matter to you? Because the dollar is the world's reserve currency. The US gets what economists call an exorbitant profit. The US can import goods cheaper than anybody else. The US can run massive government deficits and still find buyers for it instead. Because interest rates stay lower than they otherwise would. It's like having a cheat code for the entire economy. And that cheat code is powered by oil. So what happens when the machine starts to break down? So we're going to get to it. So some of you are sitting there and going, okay, it's nice to understand the macro, but I want to go deeper on how to actually pick stocks or metals right now, this week and next week, and I want to know what I'm doing. And if you're that person who's a more active, more serious investor, then I will teach you that too. Not in this video, because it would make this video like 3 hours long, and I think that would be a little tedious for most people, and the algorithm would kill me. But I'll run it for you live. And the benefit there is you can ask me questions about it too. We're going to run on this weekend, literally live session on how Wall Street is finding the next big investment opportunity right now. And I'm going to tell you what that opportunity is. I'm going to show you how I find it. But I'm also going to show you and teach you the process so that if you decide to go deeper into it, you'll be able to find the next opportunity in 3 months, and 6 months, and 9 months, and 3 years, and 10 years, teach it to your children and your grandchildren, and the process doesn't change. The same process has been around for 50 years. You join me for that live training. I'm going to felixfenzer.com. Link is down below in the description. Just click on it, sign up for it. It is a free training. You just need to show up with a willingness to learn and pen and paper, I suggest. Right. Step 2 of the framework. We know what the machine is. We know what the petrodollar is. We're all on the same level. Brilliant. Let's talk about the 3 cracks that are breaking it apart. Crack number 1 is UAE has just walked out of OPEC. UAE is one of the most powerful oil producers. UAE is one of the most powerful oil and gas producers on the planet, and it announced that it's officially leaving OPEC. Damn. Walking out the door after 60 years of membership. Why did they leave? It comes down to one thing: freedom. They've been pouring money into expanding its oil production, but OPEC keeps telling them to produce less. So they get quotas. Their quota is about 3 to 3.5 million barrels. UAE wants to produce 5 million. So it's like you build a factory that can make 5 million cars a year, but the people you're in business with tell you you're going to only make 4. At some point, you're like, this isn't a great deal. But they also, but they also joined the BRICS nations in 2023, who are building an alternative to the dollar. Yeah, this is a big shift, and their very central bank stood up to the U.S. Treasury and said, we might be forced to shift our oil sales to the renminbi. So they're saying we might use less dollars. Why? Because China is its single largest customer. With all the madness that's going on in the Gulf right now, that might be quite a nice revenue stream. And Saudi is also in active negotiations with China for long-term oil contracts. Right? We're talking 10 to 20-year deals, possibly priced in the Chinese renminbi. As we all know about Russia, they got properly kicked out of the sort of Western Hemisphere. And India just made its first rupee payment, the Indian currency, for UAE oil. So you have a dismantling of the dollar monopoly in the global oil trade happening right now. Confirmed. Not some crazy speculation. And then number 3, this is where this gets interesting for your portfolio when you get closer to the auction opportunity here. Remember the first? Do you remember pillar 2 of the petrodollar? Oil money gets recycled back into US debt, American government debt. Well, some of the biggest players in the world are now heading very, very firmly for the exit. China's holdings of US debt has fallen by about 50%. Now, some allies like Japan and UK have been buying more, so it's not a universal dump. I don't want to give you guys a wrong impression. But what really matters to me more is what are the governments who are buying less and holding less dollars putting their money in? Gold! Yeah. After Russia's foreign currency reserves were frozen, every central bank on the planet got a risk management wake-up call. They realized we hold our reserves in dollars or euros stored in Western banks. Those reserves can be seized with a phone call. And that changed everything. We've seen record-shattering gold buying ever since that Russia money grab. We're looking at about 1,000 tons per year. And this isn't just the big boys, it's also Poland, Uzbekistan, and Kazakhstan, and all the other countries that are doing. And that brings us, at least the patient of you, to the opportunity. The opportunity is follow the smart money. This is where we connect the geopolitics to your actual portfolio. Gold didn't just go up recently, it went absolutely nuts. Since the beginning of the breakout point, it went up about 60% or so. It's down a little bit, but it's still gone up pretty significantly. And if you understand what I'm drawing here means, you are in the minority of the 0.1% of investors in trade. And by that was the moment where everything turned green. And if you don't, join me on Saturday. I'll break it down for you in terms that a 10-year-old can understand. Not because I think you're a 10-year-old, but I think we all deserve some simple financial education. And we've seen some pretty strong staying power, despite the fact that countries like Turkey have been selling gold because they were hit by the Iran shock, and the rumor that Gulf nations are selling gold because they're not getting any dollars. Why not? Because no one can buy any oil or gas for them because the highway is closed, the Strait of Hormuz. So let me give you the 3 Ds. The 3 Ds are why gold, in my opinion, structurally wins. You're going to come to your own decisions. It's just my opinion. But if you look at it from an institutional lens, the gold thesis is this. So if you wish you remember nothing from this video except for this, remember these 3 words. De-dollarization. Everything we talked about. The shift by central banks away from the dollar into gold. The shift in the oil sellers to sell in other currencies than the dollar. That's a shift away from the dollar. That's your number 1 with de-dollarization. The second is deflation. The US government has been running massive deficits forever, and every dollar of that debt gets added to the pile and it dilutes every dollar already in circulation. They're printing money. Right? They're printing money to buy their own debt. Gold, on the other hand, can't be debased like the dollar. And then 3, it's just diversification. We're moving money into a world of geopolitical fragmentation, in a polite way of putting it. Europe's rearming, the Middle East is doing whatever the Middle East is doing. Trade is shifting. And countries are waking up and saying, just holding all of our wealth in dollar is a risk, it's a concentration. What can I own and put it in my basement so only I have access to it? Gold. Gold has no nationality, no counterparty. It's been a store of value for 5,000 years. So it's not about being, a gold bug or a doomsday prepper, although I think quite frankly, it is about portfolio construction in an era of massive uncertainty. And the central banks, so how do we position us? What do we actually do with this information? Well, you could buy physical gold if you want to. You could buy gold ETFs, it's much easier, right? You don't have to insure it, hold it, protect it with a shotgun. Gold miners are also an interesting play, right? Because they are a leveraged play on gold. And we had a really nice run-up with last year. And now quite a few of them have actually just been lagging this gold rally. This one, for example, NEM. We can talk about that on Saturday Live. It's not quite ripe yet, but it's looking like it could be ripe shortly. And it's a way to potentially maximize returns if your risk management is really, really tight. But the big picture is dollar isn't going to go away anytime soon. It isn't going to zero. The US has the biggest stock market in the world, and many reasons we want to invest in the US. But this unchallenged monopoly, that is fake. And once you understand the system and how that's benefited the last 50 years, and if that system changes and shifts, and therefore the system changes, and therefore you need to change. Out of most people. And that's really what this is all about. So if you want to go deeper, join me at felixfranz.org/training on Saturday. You're going to go into the specific AdWords, we're going to run through all the case studies, and we're going to look at what's the opportunity now, and how can you find the opportunity in 3 months, 6 months, 9 months, 3 years, 10 years, and so on, and then teach into your training. That's the offer. felixfranz.org/training is a free live training that we hold. It's going to be fun. It's going to be probably about 2 hours. Carve out some time, bring a pen and paper, and if you think a friend of yours might benefit from it, send them a link. I wish you all the best. Donald Trump just signed an executive order that's about to redirect trillions of dollars into a sector that most investors are completely ignoring. Everyone's watching.
The Europeans are rarely hit extremely hard by this. I mean, we saw only this week Spain's reduced price index up 46% year on year. Germany's is up over 30% year on year. And the ECB has interest rates of minus 0.5%.
All three of those are great years.
The whole thing is actually set to fall over.
Welcome to Wealthion. I'm Wealthion founder Adam Haggard. The war in Ukraine may be a more destabilizing event than many realize. According to Gold Money's head of research, Alistair McLeod, it may be accelerating the evolution of a new monetary system comprised of commodity-backed currencies. Alistair predicts such a regime will favor countries like Russia and China and threaten to fully expose the worsening problem of purchasing power devaluation that afflicts the major current world fiat currencies like the dollar, yen, and euro. Can such a momentous transition really be underway? And if so, what would the implications be? We'll get into all the details of that in this interview. Alistair, it's wonderful to see you again after so many years. Thank you so much for joining us today.
It's been too long. It's very much my pleasure.
Well, thanks, Alistair. I have a lot of questions for you, and in particular, I want to dive deeply into a piece you recently wrote called Commodity Currency Revolution. But very quickly before we do, I'd just like to start things at a very high level and ask you the kickoff question I ask all my guests on this program. What is your current assessment of today's global economy and financial markets?
Well, I think there's some very, very big themes, but the one I would really point to is interest rates. When I look back to the start of my career in stockbroking back in early 1970, I saw a decade in the UK which led to gilts, which were government stock, if you like, being issued with coupons of over 15%. Now, we have a situation today where the production of money in the form of currency, in the form of bank credit, and all the rest of it has been so much greater than it was in those days that we should not be surprised to find that inflation, by which the establishment means rising consumer prices, is actually not transient, but actually is considerably more stubborn to get rid of. And not only that, but if you think that an inflation rate of, I don't know, 8.5%, something like that in the US, is the end of it, I've got a big disappointment for you, because it's going to go a whole load higher. And it's very easy to see why that is the case. And I think what we're seeing in the markets at the moment is if you like, a growing realization that that is the problem. So where does this leave central banks and their governments and all the rest of it? Well, they're going to have to raise interest rates not to 3%, not to 5%, but possibly quite a bit higher. And where it will stop, really don't know. But there are a few things in the pipeline which always seem to happen when inflation becomes a real problem, such as we're going to have a crisis this year of food prices. We're already getting a crisis of energy because what we've done is we've cut off the largest energy exporter in the world from Western markets, or tried to. This is going to be catastrophic, and particularly for two currencies. You're already seeing the two currencies which are hit most are the ones which have, first of all, negative deposit rates. That's the first thing. Secondly, a commercial banking system where the GSIBs, the global systemically important banks, have asset to equity ratios in excess of 20 times. The strains that you're seeing materialize in the fall in the purchasing power of the yen, exchanges and all the rest of it, and also the euro, is really, it's becoming obvious. And how do they stop it? Well, the only way they can stop it is raise interest rates. But if a central bank like the ECB or the Bank of Japan raises interest rates, because they have got, they've become huge, great investment portfolios, predominantly in bonds, though recently you find that the Bank of Japan has also been buying equity ETFs. You'll find that suddenly they're all in negative equity. Central banks in negative equity. This is crazy. So now I can understand how the Bank of Japan can recapitalize itself. We've seen this before throughout history. Basically what happens is the Bank of Japan says to the government, we will lend you some money. But what we will do is to counter the loan on one side of the balance sheet, we have to have, through double entry bookkeeping, an item on our liability side. But instead of it being a deposit in favour of you, which you then draw down, we will put it in the category of another liability, and that is equity. And that way, we recapitalize ourselves. It's magic, isn't it? This is what banking is all about. Because they're dealers in credit. This is basically what they do. Now, so that's fine. The only thing I would say is for the Bank of Japan to have to recapitalize itself in the middle of a crisis is obviously not the best time to do it. It generally happens that when a central bank has to recapitalize itself, it is during a crisis. But then let's move over and look and see what happens to the ECB. The ECB can't do what I've just said the Bank of Japan can do, because its shareholders are all the national central banks. And guess what? The national central banks are in exactly the same position as the ECB. They don't have a government to turn to. And furthermore, they've got a banking system which, again, has assets to equity ratios in excess of 20 times, with certain major banks with quite large exposure to the Russian economy and the Ukrainian economy. I mean, this is going to be a very interesting one to see how they sort that lot out. This has never happened before, and it is not beyond anyone's imagination when they understand the facts and other things like target 2 imbalances. I mean, like Bundesbank is owed something like 1.1 trillion euros, which it's got no chance of ever recovering because the counterparties of that are the ECB itself, also Bank of Italia, and also the Spanish Central Bank and the Greek Central Bank. I mean, this is an interesting situation. And then there is a further problem, which I don't think many people are aware about, and that is that, well, you've heard of the repo market. Basically, the repo market is the way in which banks rearrange their liquidity between themselves. But it's bigger than an interbank market. Interbank market basically is borrowing lower amounts of money without having to put up collateral. But the repo market involves collateral. Now, we're terribly excited when you see that the reverse repos, whereby the Fed at the moment is absorbing excess liquidity, is running at about $1.7 trillion. Guess what the figure is for total repos and reverse repos, without double counting? We're looking at about 8.3 trillion euros. I mean, this is, so we have got the situation that I've described. Central bank with shareholders who are bust as well, and you've got the G6, major banks are more than 20 times asset to equity ratio. You've got the target 2 system with all its imbalances, and on top of that, you've got banks which actually have used, I'm sorry to say, they've used the repo market as a means of concealing bad debt, because that's another thing. You get a local regulator, let's say the Italian regulator. He's approached by the banks whose auditors have said, these should really be classified as non-performing loans. So what does the local banking regulator do? He says, well, I tell you what, the thing to do is to put it into a bunch of collateral and lend it out to someone else via a repo, like into the target 2 system. And then it's off my patch as a regulator, and I don't have to worry about it. And it therefore is no longer marked as a non-performing loan. Well, so you've got all this rubbish collateral within the system. And that brings me on to another major point. And that is that the whole of the Western world has moved from a banking system which is primarily focused at extending credit to producers, people who actually will take that credit and try and get a return on it. And the collateral that the banks have taken in the past were basically assets that produced a return. Now, it could be a charge, let's say, on property or a factory or something like that, or it could be shares in something which actually pays dividends and gives a return to the owner of the asset, from which the bank can then say, well, at least we have got a stream of income and value in the collateral which underwrites the loan. We moved away from that, really from the Big Bang in the 1980s, and what's happened is that progressively the collateral within the banking system has become purely financial. And I was actually thinking about how to describe this. When you look at the financial collateral, it's financial collateral of financial collateral. In other words, we're no longer talking about collateral that has any basis in terms of production, but but it's things like derivatives, it's things like, sort of government bonds and things like that. I mean, this is all non-productive stuff. These assets just don't produce anything. And so, you've now got a mountain of assets, rather like a sort of Ponzi scheme. And instead of it, do you remember in the Lehman crisis, we had credit default obligations, and then we had credit default obligations squared. Well, here we've got financial assets squared, and I think even more than that, financial assets to the power of n, where n is actually quite a significant number. And it's the whole of that procedure which is beginning to topple. So this is not just yen, it's not just euro, it's the whole of the international banking system which has become progressively divorced from assets which actually produce things in terms of the collateral that secures its lending. It's all just hot air. It's the theory. And so when you get the systemic risk that inevitably is going to spread from the Japanese banking system to the euro system of commercial banks, who knows where it's going to stop? I mean, this is something which I think is very, very serious. And it's what interested me was a guy called Sultan Fesa of Credit Suisse, who I'm sure a lot of your listeners have heard of. And I'm actually going to be debating this with him at the end of this week. But what interested me was the way he came up with this description of Bretton Woods 1, Bretton Woods 2, Bretton Woods 3. Now, this was, if you like, shorthand for, we all know what Bretton Woods 1 was, and that ended in August 1971. His version of Bretton Woods 2 was what followed it, which is this financial, the gradually increasing level of financialization within the banking system that we have running up to a problem today. And what he's now calling Bretton Woods 3 is the move from this financialization to a more commodity-based future. And we are seeing this with Russia and China, and not only that, but the central European states, which also includes Russia, for example. And you've got Russia in this, and you've also got China being a partner in this, coming up with a new trade settlement currency. Now, we don't have details of this yet, but it appears that the plan is that this will be based on currencies of the people involved, of the nations involved, and I don't know what proportion it will be, but something like 20 commodities, including energy, metals, and so on and so forth, which the area will be dependent on to back this new currency. So this, if you like, is a more commodity-based currency. So what we are seeing is
the views of the Supreme Court. For clarity, the decision prevails.
Justice filed two separate charges of violation of the tax code before the Court of Tax Appeals against E&D Parts Supply Inc., a duly registered domestic corporation, its chairperson, Cipriano Uy, and its treasurer, Margaret Uy, for their alleged failure to pay income and value-added taxes for the year 2006. While the charges against Cipriano were eventually dismissed by reason of his death, Margaret pleaded not guilty to both charges. The Court of Tax Appeals Division granted Margaret's demurrer to evidence due to insufficiency of prosecution evidence to sustain a conviction. The CTA Division also declared that no civil liability arose from the alleged offenses, saying that with Margaret's acquittal, the corresponding civil action against her was likewise dismissed. The CTA on bank later affirmed the ruling, prompting the government to go to the Supreme Court. This brings us to today's topic. Does the acquittal of an accused in a criminal tax case automatically extinguish civil liability for deficiency taxes, or relieve the taxpayer of the obligation to pay unpaid taxes? Hi, I'm Attorney Mike Navarro, Supreme Court Chief Communications Officer. It's the 24th of April 2026, and today we talk about the civil liability of a taxpayer accused for deficiency taxes despite his or her acquittal in a criminal action for violation of tax laws within the context of the case of People of the Philippines versus ENB Parts Supply Incorporated and Margaret and Uy, GR number 259284. This decision was penned by Associate Justice Mario V. Lopez and decided by the Supreme Court Second Division on January 24, 2024. And with us to discuss this case is Attorney Maria Gracia M. Pulido Tan, a member of the Taxation Law Department of the Philippine Judicial Academy, a certified public accountant. Attorney Pulido Tan is the first woman chairperson of the Philippine Commission on Audit, where she served from the year 2011 to 2015. She also served as a commissioner of the Presidential Commission on Good Government from 2002 to 2003 and as Undersecretary to the Department of Finance from 2003 to 2005. So, hi, Chair Pulido-Tan. Welcome to the Supreme Court PH podcast.
Thank you. My pleasure.
Thank you for welcoming us to your wonderful office here in Pasig. Now, Chair, our topic is very timely because we just finished tax filing season. It's that time of year again. When April comes, you need to file your income tax returns and pay your taxes. Just to kick off our discussion, what are the consequences should you fail to file the proper income tax returns or pay the appropriate taxes?
There are both civil and penal sanctions for that. You are never excused from paying the tax, plus interest and surcharges, penalty surcharges. At the same time, if there is a finding of criminal offense, like intentionality, malice to evade taxes, then the perpetrator, the taxpayer, may also be held criminally liable, which means a hefty fine plus, of course, imprisonment.
And it's very interesting because in this case, we were actually dealing with both. There's a criminal aspect to it and there's a civil liability aspect. So let's go to the case of People of the Philippines versus END Part Supply Inc. and Margaret and Uy. What led to the filing of criminal charges against the company END Part Supply Inc. and its officer, Cipriano Uy, its chairperson, and Margaret Uy, its treasurer, for alleged tax violations?
In this case, there was a tax investigation that was conducted on E&D and Park Supply, and on the basis of that examination, it was determined by the BIR that E&D failed to fully pay the taxes that were due, supposed to be payable by it. And so they issued an assessment that is what we would call a deficiency assessment. Kasi nakapagbayad na dati eh. Pero during the audit and investigation, nakita na kulang. Okay? So that is what we mean by a deficiency assessment.
Right.
And of course, when you have that, the BIR will also say, you have to pay us this amount within a certain period. And what happened was, ENP did not pay the deficiency assessment. And so, the BAR filed criminal charges against END, the corporation, who is the real taxpayer in this case, and its officers, Cipriano Uy, being the chairperson, or alleged to have been the chairperson, convicted because E&D is a corporation, separate, juridical person, separate from its officers and shareholders, and it acts through its officers,
Right.
which is why Cipriano Wu and Margaret Wu were included in the charges.
So liability of the corporation at the same time, individual liability of the officers of
Correct.
the corporation,
Correct.
right? And I understand, Chair, that we're talking about deficiency income tax and deficiency value added tax,
Correct.
right?
Yes.
So what specific acts are we talking about in terms of alleged willful failure of EMD and its officers to pay income and VAT?
It was simply that they did not pay at the
Mm.
time prescribed by the BIR in their demand and the final assessment notice. The FAN,
Mm.
FAN, final assessment notice. Yun lang. Hindi sila nagbayad sa itinakda na panahon ng BIR. And for that reason, they were charged criminally because that is a criminal offense under
Right.
the tax code.
Did they have any reason for not paying?
I I did not find anything said about
Mhm.
that.
Right, right. It's just very curious. If you receive an assessment from the BIR, normally you would have to, either pay it or contest it.
Mhm.
They don't. They also did not
They
contest
did
this
not.
one. So very curious what happened in this case. So, but with respect to the criminal case, Margaret Ray pleaded not guilty to both charges, and so she filed a demurrer to evidence, and that's essentially a motion saying that the prosecution's evidence is insufficient to warrant a conviction. She was successful. The CTA division granted the demurrer and dismissed the case against her. So let's go to that acquittal first, Chair. What was the reason of the CTA division for acquitting her?
Because this is a criminal case, we need proof beyond reasonable doubt
Mm.
to convict.
Mm.
And here, the court found that there was no proof beyond reasonable doubt.
Mm.
In particular, the prosecution failed to prove that Margaret was a responsible officer of the corporation. They alleged that she was the treasurer, but in the course of the proceedings, they were not able to prove that she was in fact the treasurer or to identify what participation did she have, if any, on the failure of failing to pay. Those things kasi you need to prove it.
Right.
But in this case, there was no such proof.
So when you say responsible officer, there should be an obligation on your part that's directly connected to the very allegation, failure to pay
Yes, the duty to pay.
tax.
Yes.
Right. So from the CTA division, the Office of the Solicitor General went to the Court of Tax Appeals on bank, which also sided with Margaret. And just for the benefit of our listeners, what was the reason for the CTA on bank to stand by the ruling of the CTA?
Yeah, essentially the CTA and Bank upheld or affirmed the ruling of the division, the CTA division, that there was no, that there was insufficiency of evidence, that willfulness on the part of Margaret in not paying the tax demanded by the PIR was not shown beyond reasonable doubt.
Mm.
So the CTA and Bank said, well, if there is no willfulness, then she cannot be convicted of the crime because that is an essential element.
Mhm. So eventually the case reached the Supreme Court chair, and the court at the outset clarified that EMD's exoneration from liability to pay taxes was not because of its acquittal in the criminal cases. And it also said that Margaret's acquittal in the criminal case against her was proper. Uh, can you elaborate on these findings of the Supreme Court? Because for our listeners, sometimes the logic is that if you've been acquitted from a criminal case, then you shouldn't be made to pay for the civil liability. And I guess this is where we need to clarify that particular aspect of this rule.
Okay. First, let's go to the pronouncement that Margaret's acquittal in the criminal case against her was proper.
Mhm.
Proper because there was insufficiency of evidence,
Mm.
not enough evidence beyond reasonable doubt. So
Right.
she could not have been convicted. That is very basic in criminal law. There's always that standard of proof.
Mhm.
Now, on the exoneration from liability of E&D, from liability to pay taxes, it was not because Margaret Uwe was acquitted in the criminal case.
Mhm. Yes.
Remember, we said earlier that E&D is the real taxpayer in this case.
Mhm.
And Margaret was alleged to have been a responsible officer of E&D
Mhm.
instrumental, or who should have paid the taxes but did not. Okay? So they are two different persons, Margaret and DNP. The fact that Margaret was acquitted from the criminal case does not, therefore, automatically mean that E&D should no longer pay. Okay? It doesn't follow. The reason why E&D was exonerated from liability to pay taxes was because the Supreme Court found that the assessment to begin
Right.
with was void. Okay? And then the court here explained that the liability of E&D for taxes is created by law. It's in the law. I mean, the law requires every taxpayer to pay taxes. Okay? It is not arising from a criminal act.
Right.
For example, in this case, the act supposedly of Margaret having refused or failed to pay the tax. It, these are two different things,
Right.
right? So, simply because Margaret is acquitted does not therefore mean that E&D should not pay the taxes anymore in the usual course, were it not for the twist in this case. E&D would have nonetheless been held to pay for the taxes that were assessed against them.
Right. The only thing here is that the Supreme Court found that the assessment was wide.
Correct.
We'll get to that in a bit, but very curious about the distinction between civil liability arising from crime and the obligation to pay taxes. Because there was that distinction here that the court was saying you already have that obligation to pay, whether or not you evade payment. So the evasion part is that's the criminal aspect. So even before there could be a criminal aspect to it, you still have that civil liability.
Right. Because Margaret was charged for her failure to act in behalf of the corporation to pay the tax that is being demanded. So that is personal to her. It's a personal obligation. But she was not um, being held accountable for the tax
Right.
itself
Yes.
that is supposed to be paid by
EM.
EMT.
Right. Right.
Yes. So that is the distinction here.
Mhm.
So, iba yung offense na ipinapatong kay Margaret kesa dun sa offense ng END. Si END, ang obligation niya was to pay the tax.
Right.
Okay? And hindi naman siya yung na-acquit.
Right.
It was Margaret. Ang kasalanan ni Margaret, hindi siya nagbayad in behalf of the corporation. So remember, the corporation cannot act
On its
not 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 like us ordinarily, diba? It has to act through its officers. And one of them was supposedly Margaret.
So, and curious that the court actually said her participation was not established.
Exactly.
So, had the prosecution been able to establish that she was really supposed to be the one to pay this and to file this, then she would have been liable.
Correct.
Criminally.
Criminally, not for the tax,
Yes.
again, not for the tax, but for her failure to pay in behalf of the corporation. And that's a totally different set of penalties. May fine, may imprisonment. But the fine is not the tax itself.
Yes.
Yeah. D&E would still have had to pay the tax that is assessed against them.
And let's go to that aspect, the void assessment, because that made all the difference in this case. Otherwise,
Correct.
END would still have to pay the tax, right?
Correct.
How did the court find that the assessment for deficiency taxes was actually void? What are the requirements when the BIR goes after you? What are the requirements so that the assessment can be valid?
Well, number one, there must be a valid letter of authority. A letter of authority is generally that document, a piece of paper, where the BIR indicates specific persons who are authorized to conduct audit and examination of a taxpayer's books of accounts. Okay? So, nakalagay talaga doon, sino siya, si X and Y, ano yung year, anong klaseng tax. So, the authority must be very clearly set forth. And course, as an authority, it must emanate from the legitimate source, which in this case is the Commissioner of Internal Revenue, and meron tayong tinatawag na delegated authority, pwedeng mag-issue din yung mga regional directors and some other offices of the BIR. But these are all written delegated authorities. Now, in this case, the LOA, on the basis of which the audit and investigation or examination was conducted, is void. Why? Because what happened was, merong LOA, walang problema sa LOA na yon, but the officer named in the LOA was subsequently transferred or reassigned somewhere. It's like that. They go around, right? And then what happened was, so the case was reassigned to another examiner
without an
without the LOA having been changed
to the new.
to the new one. So,
So it's that sensitive pala.
yes, it's that
Kailangan kung
sensitive.
sino lang ng pangalan siya lang. And the issuance of an LOA, is that dependent on a prior finding that there could be a problem with the payment of taxes of this company, or it's really issued by regular course of business that you have a specific examiner for this set of corporations in this area, for example?
Yes, it is in the usual course, I would say. It's really the job of the BIR to do that. But how do you get chosen?
Yes.
I think that's another matter. Um, there is no hard and fast rule, at least insofar as taxpayers are concerned. But now, under the new administration of BIR, they have a new system. It's computer assisted on how taxpayers for audit and examination are going to be selected. And there is a set of criteria that they feed into this system at siya yung mamimili kung sino ang ma-examine.
So it's not like pure luck anymore. Hindi na siya parang raffle.
In a way, ganun pa rin.
But it's more informed.
Yeah,
With
it's
parameters.
with parameters, very clear parameters. And I think human intervention has been lessened considerably. Yes, this is a new system. I think it started only this year.
Okay. And really, the reason why it's only selected because the BR cannot audit everyone.
Oh, definitely. No way. No way.
So, kumbaga, there's the element of luck and malas as well if you get chosen, right? So this is all very interesting.
From the Supreme Court of the Philippines, here's the latest. The Supreme Court on Bank, during its session on Wednesday, directed President Ferdinand Marcos Jr. and Acting Executive Secretary Ralph Recto to comment on the petition for writ of mandamus filed by
I mean, I'm sure there's a lot to talk about the LOA, but are there things that we have to keep in mind? For example, if you are that corporation who received, for example, an assessment, what should you keep in mind the moment you get an assessment? Are there certain periods that you have to follow for you to be able to either contest or at least pay the assessment?
Yes, I think any assessment should be taken seriously because in law, any assessment issued by the BIR is presumed correct. Okay? So, at the very outset, you're already at a disadvantage because it becomes your burden to prove that it is not correct.
Right.
Otherwise, if you are not able to do that, then is correct or not, really, it will become final and executory, and they can run after you as they did in EMD.
Mhm. What could have END done? Where should they contest the assessment? At the BIR? Should they go to court just to be able to challenge the assessment?
To the CTA.
CTA.
Yes.
Mhm.
Final assessment of the commissioner.
Mhm. Mhm. All right. So there's no room for that for you to negotiate with the BIR commissioner to have your assessment re-examined at their level.
Well, because it is a final assessment notice, then chances are there is no more of that.
Mhm.
Because before a final assessment notice is issued, there are already
There are steps along the way,
steps
right?
already.
And they could have challenged that
Yes,
at that
there is in
level.
fact a preliminary assessment
Right.
notice.
Mm.
Then that is when you discuss it
Mhm.
at the PIR level. Uh, but apparently, in this case, they even ignored the
Right.
PAN.
Which is very curious of corporation to do that.
Mhm.
Right. So, Chair, lastly, by way of summary, perhaps what should we keep in mind in terms of at least the issue of payment of taxes, the criminal liability, and the civil liability? We've already discussed the obligation of the taxpayer to at least take assessment notices seriously. So, just for the benefit of the listeners.
Well, we've discussed the case, so I'd like to give some very pragmatic reminders. First, the duty to pay the tax is an obligation created by law. So we have to take it seriously because, as we all know, ignorance of the law is not an excuse.
Mhm.
So if you are not really into it, because tax is a very technical
Yes, yes.
subject, as you know, but please get a trusted advisor for the
Yes.
purpose. And then the next thing that I'd like to say is also that being a corporate officer is a very responsible position. It
Mhm.
is serious business. So it is not just a decorative
Mhm.
position. There are responsibilities that are attached to it,
Mhm.
and it is important for any corporate officer to be very aware of what these responsibilities are.
Mhm.
Okay, and then I would also say that when it comes when the taxman comes knocking,
Mhm.
that means that you need to stay vigilant
Mhm.
because, for example, here in this case, when they looked at the LOA,
Mhm.
ibang tao naman ang nakasulat dito. Bakit?
Siya ang nag-assess.
Diba? So, and you know that made all the difference.
Yes, yes.
Yeah, but if, for example, you're not aware of that, you're not vigilant
Mm.
of that, then it will go through the process, and
Right.
you're going to be on the losing end.
They might have hired really good lawyers here because despite the fact that they were not able to take care of the assessment, they were able to at least challenge the assessment at the court level by looking at the LOA. So,
Yes, that's why it's very important to really get a good and a trusted advisor on
right.
that. And by advisor, I mean could be a lawyer, could be a CPA, basta you can trust that person that he or she will be able to protect your interests.
Mhm. And lastly, perhaps because let me take this opportunity because you've been head of COA and then you've also worked with government before. Um, when it comes to payment of taxes, your obligations as a taxpayer, sometimes people tend to forget that you have to pay this amount of taxes at a particular date, or that you have certain returns that you have to file on maybe monthly basis or quarterly basis. How should you deal with that, assuming that you're doing it on your own? What's a practical advice?
Just go to the website of the PAR because they have a tax calendar.
Mm.
So like every month, nakalagay doon kung ano yung mga taxes or returns that you're due for filing, that you're due to pay.
Mm.
So that's very important. And in fact, they have a physical calendar that
Right.
they give away to taxpayers. So you have that also.
So particularly for those with multiple income streams that they
Uh-huh.
have to file on their own. So
Yeah, yeah. It's either you are earning business income or professional or sorry, compensation income. Compensation income madali kasi
Oo.
may grouping.
Yes.
And then you have substituted filing, your employer will file for you.
Mm.
But it's when you are in the practice of a profession, you're engaged in trade or business, that you really have to be very informed.
Mhm.
You have to be proactive in knowing what is it that you need to do, what are
Right.
the taxes that you have to pay.
Well, on that note, thank you very much, Chef Lina. This has been very informative. It's also for me to revisit tax concepts.
Ano yung parang
Parang
review?
tax one. Parang tax one class natin. All right, so if you wish to read the full text of the courses
From the Supreme Court of the Philippines, here's the latest. The Supreme Court on Bank, during its session on Wednesday, directed President Ferdinand Marcos Jr. and Acting Executive Secretary Ralph Recto to comment on the petition for writ of mandamus filed by the Supreme Court of the Philippines. Here's the latest. The Supreme Court on Wednesday, April 29, 2026, dismissed the petition for mandamus filed by Catalino Aldea Henrique Jr., which sought to compel the Senate to immediately convene as an impeachment court to try the charges against Vice President Sara Duterte. Voting 14-0-1, with Associate Justice Alfredo Benjamin Caguua taking no part, the court, through a decision written by Associate Justice Rodin Zalameda, held that a mandamus petition is not the proper remedy as against a co-equal body's exercise of its duties. But even treating the petition as one for certiorari, the court said that there was no grave abuse of discretion on the part of the Senate when it acted on the impeachment complaint in a timely manner. The Constitution, it noted, does not specify a fixed time frame for the Senate to start an impeachment trial. Instead, the term forthwith gives the Senate a reasonable time, which may be longer or shorter, depending on the circumstances of each case, to allow the Senate to make the necessary preparations. Still, the Senate must avoid undue delay. Senior Associate Justice Marvick Leonen disagreed on this point, arguing that the impeachment court should have been convened immediately and that the impeachment court, not merely the Senate President, should have taken charge of organizing the court. All 14 justices participating, however, voted that the petition is already moot, having been overtaken by Senate impeachment preparations and the eventual nullification by the Supreme Court of the articles of impeachment against the Vice President. The Supreme Court has acquitted a mother of parricide over her daughter's death, exempting her from criminal liability after finding that she has schizophrenia and her mental state deprived her of the capacity to recognize the wrongfulness of her act. In a decision written by Associate Justice Samuel Garland, the SE's third division granted a mother's appeal and overturned her parricide conviction on the ground of legal insanity due to schizophrenia, an exempting circumstance under the revised penal code. The mother was seen carrying her 5-year-old child as she jumped off a bridge into a river, which led to the child's death. Based on the testimony and mental status examination reports from psychiatrists, the court found that the mother was able to medically prove that she was suffering from schizophrenia at the time of the crime. The court ordered the mother's immediate transfer from the Correctional Institution for Women to the National Center for Mental Health for her treatment. Although exempted from criminal liability, the SC held her civilly liable, ordering her to pay civil indemnity and damages totaling 275,000 pesos. In another case, the SC on April 28, 2026, resumed